Because these are some equities that Basil Chapman looks at. Again, I love the opening call newsletter. That is one that I read religiously. You have the newsletters tab here right on TFNN.com. If you go ahead and go over there, you're going to see on that first column, second row, the opening call newsletter by Basil Chapman. I strongly recommend checking this out, not only because it's a fantastic newsletter, but you also get a fantastic long-form video for the weekend. Then additionally, you get access to all of Basil Chapman's subscriber webinars. He just did one in November about sector rotations. And man, oh man, are we about to see something like that. He is calling in from the land down under. Basil, how you doing?
I'm doing well, Jacob. How are you?
Doing well. So glad we could get you on. Always like having you on, so it's nice we could get. Yeah, I know the tech was a pain. I was getting frustrated trying to figure it out as well. Like you said in the den, when it works, it's fantastic, and when it doesn't, it is just mind-numbing. So, Basil, what are we looking at right now?
And sometimes there's just one click that you just don't get right. And
I know.
If you do get it right, you're on. Okay,
totally
we're
understood.
on. Here we go.
Let's look at it.
So I'll go backwards. So first of all, Solventum is something I've spoken to as a stock that I've spoken to you about for quite a while. We've been long since around the 57 level. This is way back in the fall of 2024. I've loved it. We've had really good trades with it. We've also had it as a position that I wanted to have it as a core position, thinking that the 96.05 high that was made in March of 2024 had a really good chance of being tested in 2025. And it was just going sideways in the 75 area. And then out of the blue, well, it wasn't out of the blue. It was mentioned earlier in the month, but then all of a sudden it came through. So as you said, TMO, which is Thermo Fisher Dynamic, here in the Massachusetts area. I used to always pass them at Route 128 here in the Boston area and the Waltham area. And it's a fantastic company. Thermo Fisher, I remember there was the CEO decades ago, just everything he did, he bought the right companies, he built it up, and it's a fantastic company. Anyway, so Solventum, as you said, had one of the parts bought by Thermo Fisher, so it's had a really good bounce and is trading now at 83. So that's a stock that we've been holding, haven't wanted to do anything other than add to it, which we've done periodically, and here it is acting very well. But most importantly, what I wanted to mention is, as you know, since December into January, I've been talking about this and saying that there's a really good chance that the tech sector could start to see the upside being limited.
Yes.
But it also meant in many ways, if you look at the overall picture, that the key market indices could have limited upside. They could make new all-time highs, but from that area, I think we're going to go sideways into March, and I'm anticipating there's a good chance that we get the traditional March, it's usually March or October low, and then that's going to be the big test. So where it comes from is going to be difficult to see right now. I think I need Friday's close to give me the weekly. But look, here's the chart. Here's the Dow. Let me just get the arrow. There it is. Here's the Dow. It's made a 50% retracement. It went to 45,054. It was a double top from the 45,073 high that was made at the end of December, beginning of January. So these double tops are really quite potent. You've got to look at them with great respect, because very often that becomes, I've got the pattern called the dreaded H or the reverse Y, where either the double bottom gets tested or the double top gets tested. So but look, the weekly chart, the 9-period moving average is still holding really well. The monthly chart still looks very good.
Yes.
So I've had a sell signal going to a sell mode. We're being short. We actually have a core long position from way down on the 13th of January at the exact low. And it made that fourth highest peak D in the daily chart at 45,054. It then made the H pattern, which is really two arches. I call it the lowercase h that goes to a lowercase m pattern. So we've got a 2x short as a trading position, and we're staying with that position for now. But you can see with everything that's going on, we really aren't down from 45,054 to this 42,000 points. It's really not a big deal yet. So this is going to be something to monitor. But the weekly chart is still very strong. And if I go look, even the S&P, which we actually are short, the S&P the weekly chart is really still very good. And even with everything that's going on right here, it's only now that the 9-period moving average in the daily chart has gone negative. So these are all shorter-term trades. And if you are looking at the volatility index, let me just get that for the moment right here. Look at this. Here's the volatility index. It's rallied, and it is in the higher range. And this is telling me, and I drawn this the other day, and I said to subscribers, I suspect, based on this particular pattern that I'm looking at here, that there's an arch formation at the low that was made around about December the 23rd.
Yep.
We're coming in to test that, and that this is the week that we should see a big spike in the volatility index, which is the reason why we wanted to be short and why. And now I can go to the other positions that I wanted to talk about. You had mentioned, Hood, why we wanted to take profits on stocks that we got at much lower lows. So we want to keep those core positions. I was actually just about to get on the plane on that Wednesday. Wednesday, what was that? That was the 13th of February, and I said in our long position, which was at the almost exact low of August in Hood, down the 16s, we want to take a little bit more off right here if there's a gap up, especially if there's a gap up on earnings, and there was a gap up. So we got out at about 62, 63 on a small position because we want to keep our core, and the all-time high was 66.91. So you can see it's now pulled back, but I like Hood, and I've put it together as an indicator of where possibly gold is going and Bitcoin. So if you look at Bitcoin, I've been negative Bitcoin for a while. We've been long for quite some time. We've kept our core position. Let me just get the BTC. There it is. And look, it's pulled back very sharply. It went to 110,975. There's that arch formation, the dreaded H, and it took it out sharply in the weekly chart and the daily chart. I think Bitcoin's going to have a bit of a breather here. And I'll just go to gold for the moment because gold has held extremely well. It's right here at a bit of a toppy area, just shorter term. But if you look at the daily chart, still very strong. Look at the weekly chart. Look at the 9-period moving average, that green line above the 14. And the price is still way above the green line. And the MACD is good and stochastics at 88%. So out of the different sectors, gold has so far held extremely well. Yeah. So I'd also mention to you that AIQ, which is the Artificial Intelligence Global X ETF, was getting a little bit toppy. We've been long for quite a while, a really long time. And it went to the 42.78 high. Now it's digesting gains. But even in the weekly chart, it is still holding well.
Sure. Well, Basil, if you want to hold right there, we can go into the next segment.
Okay, very good.
Fantastic. Folks, stay right there. We'll be right back with Basil Chapman after this break. Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. We are joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. Strongly recommend checking that out. Additionally, he is the host of the Tiger Technicians Hour on every day the market is open at 10 a.m. Eastern Time right here on TFNN. Basil, take a look at AIQ. I know some toppiness in this guy as well.
Well, this is interesting because if you look at the, in Chapman methodology, a buy signal upgraded to a buy mode invariably goes to 4 higher peaks. That means it should go to a peak A first, then a peak B, a higher high, then a higher C, peak C, and then a D. D is where other things can happen. But look, this is the candle for February. And so far, yes, we're almost at the low of the candle, and we've only got a couple of days left. But this is still very good action. So my point here is that if we are going to have a much greater decline, it's so far we've used time and just a little price in many areas. But a lot of the weekly and the monthly charts are still looking very good. Look, here's ARKK. We've taken really nice profits. We had this a couple of times. This is Kathy Wood. It's her innovation fund. Yep. ARKK is the symbol. I need to clarify just before, I didn't mention Hood was Robin Hood. And the reason why I mentioned Robinhood and gold, because they are the players in Robinhood that really go for the gold stocks when they're moving, and they go for the Bitcoin. And I think that's the reason why I think I'm watching it very closely, because Robinhood has pulled back quite sharply.
Yes.
And you've got Bitcoin, but gold has held well. So I just wanted to clarify that. So ARKK went to 68.43. We've been taking profits on small positions. We're trying to keep our core position. And then we finally got stopped out of the last core position for a gain. And now we're waiting, because these are areas that I think are still going to work in 2025. So this is the reason I like this very much, is because it's in the areas that have really been beaten down just terribly. And now some of them are starting to come back, and she did everything wrong on the way down. But I think on this 2025 is going to be the year that she does much better on this particular this particular fund. Then I wanted to also mention that the TLT, and I just discussed this briefly recently, but it was still a work in progress, because since I would say probably about 4 or 5 years ago, when markets pull back, when they have very sharp corrections, this is going all the way back to the 1987 crash, it doesn't matter.
Yeah.
The bonds saw the money come flowing in, and stocks went down. But over the last 5 years, it's been the exact opposite, because when the market went down, bonds went down and yields went up. This is the first time we're looking at the bonds going up and yields coming down as the market's digesting. So if that's true, this is the first time that we've gone back to, I wouldn't say traditional, because we really don't know if it's traditional, but it's kind of what used to happen a lot for 40 years in the great bull market of bonds.
Right.
So this means I need to watch this very closely, because how does this mean that I'm going to Toll Brothers. Does this mean that the real estate area, home builders, are going to do well? Well, this is very interesting, because they've had spectacular gains. So I think that they're having their normal decline. That's the home builders. So that makes, on the one hand, you've got market pulling back, yields coming down, bonds going higher, but it isn't impacting positively the home builders. So this is an area I think they are very overbought, and those home builders could continue to pull back.
Definitely.
So that's that one area. Then there's something else that I wanted to talk about. I wrote down here. Within the context of all these stocks like Salesforce, and here in Sydney, Australia, there's a huge, one of the tallest skyscrapers is Salesforce. Okay. They're just finishing work on that building. And you can see it's pulling back very sharply. Now, I spoke about double tops. Look at this. 357 was the high on the 7th of January. And but the high that was made back on December the 6th was 369. Let me just double check that. I think it's a 6. Yeah, there's a high and there's a double top. You can see in that weekly chart. So I respect these double tops, even in stocks that have been absolutely fantastic. And Salesforce has been really a great winner and a great company. But I think they're pulling back. So when we're looking overall, if you're looking at the stocks like Salesforce, if you're looking at Amazon starting to pull back, but it feels like it's a sharp move in Amazon. But actually, if you look at the weekly chart, the 9 is still above the 14. It's holding quite nicely. It made a top in the 240s, trading right now at 213. So there's this rotation that's going on. And I had mentioned this before, and it's one of the reasons why I spend so much time when I do my weekly overview. I discuss these stocks in great detail that we actually own or we are looking at that are either very important to the market or stocks that we might have missed on the way up, and on the way down we would like to put them in the portfolio. This is going to be a very important time to be looking at what is working in this particular phase. So when we go to what's working in this particular phase, we went to we went to SLX, which is the steel ETF. And that steel ETF is holding okay right now, but tariffs, and here in Australia, steel is a big deal. It is a really big deal. So they're very nervous about what's going to happen with the US and Australia in terms of the steel. But you can see that in the weekly chart, here's the steel monthly chart went to a 75 round number high back in December. It's really unusual to get an ETF that's a composite to go to a round number, and it went to a round number 74, 75. It's pulled back, went all the way to 57 back in the 13th of January, and now it's rallying. So the fact that tariffs might improve U.S. steel stocks, I had a buy on this, and we've still got that as a long position, a small long position, but it's a work in progress. You can't just relate something that might be helped by tariffs. It doesn't happen overnight. So it's a work in progress. But I am saying that this is a period where you want to be looking at what are the potential areas that were very weak that could start to move up in 2025. So this is in our portfolio. It's a starter position. We might add to it, but this is what I'm looking at for 2025. What worked before in this big pullback, if the stocks or ETFs that held very well in this pullback, they could actually rally again in 2025 for the next big phase. So I'm just waiting for March, and we'll see if we get that buy signal in March.
Basil, fantastic analysis and info as always. We will, well, I guess we'll see you Tuesday.
Yes, Monday actually, but I'll see you personally on Tuesday for the interview.
Take care,
Thank
Basil.
you very much, Jacob.